This is the MTPredictor weekly update for January 29th. Alright, so we've got the Fed meeting out of the way last week. We're coming up on the end of the month of January, which is a significant month. We'll get a monthly candle close here in a few days, which will be significant. Here's the chart of the S&P here, and you can see there's an automatic trade set up here to the short side of TS3, but you see our strong trend filter here is blue, meaning the bigger trend is now up. So our standard traders would avoid short trades at this point. But we are in a resistance area, and that's really what the software is pointing out with this ABC pattern here, and also some decision point resistance. You can see the next resistance area would be our typical wave C resistance. That's around 1360 area, and then some major resistance above that off the two prior swings. These were the highs back in May of 2011 and July, where we had our wave 2 heading into wave 3. We got our rally into wave 4, and then we got support in this wave B heading into wave C. We took out the wave 4 swing, which was significant. We get this rally into earnings season, which is typical. As earnings season comes to an end, we'll have to see. Again, a critical area here, more resistance here, but in order to get into this area, they have to take out that prior swing high, which is significant as well. So if they get through this area, again, things still more bullish than bearish now, because we did not, the wave 4 swing here, which was wave 4 when we had our wave 3 down here, did not hold as resistance. And we talked about this swing. If this swing got taken out to the upside, things would be more bullish than bearish. Now we are in resistance, but again, we're going to ignore the short setups because our strong trend filter now is to the long side here. If the oscillator gets into the gray band at the top here, that'll tell us that there's more potential upside ahead, just as the oscillator got into the strength band here on the downside, telling us that at this point there was going to be more downside ahead. So we'll watch for that as well. If we see that, then even if we're pulling back, it'll tell us we may get another leg up. So we'll keep our eye on that. Let's just take a look at our Dow Contract here, and here's the weekly YM. You can see again short signal in the wave C swing. We're going to ignore STF is positive, or the bigger trend is to the upside. But you see we had our major DP high. That was at our wave 5. If we take a look at our Elliott waves, our 5-wave pattern up. This became wave 1, up to wave 2, went down wave 3. Here's our significant wave 4 swing, our high in the wave 4. They took that out to the upside, telling us things were going to be more bullish than bearish at that point. If they were not able, we talked about this, if they were not able to take that area out to the upside, we'd be looking at lower prices and probably test this wave 3 low. But we didn't get that. We got this rally now in earnings season. So again, things a little more positive than negative now, but we're in a resistance area, so we'll see how that plays out as we wind down the month here. We can check out our Goldman Sachs. Again, we looked at this because this $100 level in Goldman is kind of a line in the sand. Above it, the market will be more bullish. Below 100, we'll see more bearishness in the overall market. So we got our STF showing some strength to the upside in Goldman, so we may get another leg up here. This TS3 is not a trade that we would particularly take because it's against the bigger trend there. But you can see where the target is. It's just showing us this is going to be the next resistance level. So we may, if we get up to this 115.50 area in Goldman, then we may see a pullback after that point. So again, Goldman telling us things are more bullish than bearish. And let's take a look at some of our commodities here. We're looking at gold. This is the weekly chart of gold. We had our buy signal. This is with the bigger trend, the blue STF telling us the bigger trend is up. We're at the 100% initial risk line here on the bigger time frame at 1740 and change here, which tells us we can move the stop if you're long from 1523.90 to your entry. So this is a risk-free trade at this point. So you see the target there at 1893, 1893.50 we'll call it. And also off this little B swing, if we take a decision point, you'll have some resistance just before that area. That'll start right around 1839. Alright, so just be aware of that if you are long gold. We'll see how that finishes out. Let's take a look at oil. Again, we had the long in oil on a neutral trend, so we could go long or short that. We'd actually short that off of this. I'm sorry, we'll go long that off of this blue buyer's candle here. So it hit the target there, and you see we've got a pullback now into what would be wave 2 or B. Looking at this as wave B, we can actually project new wave C up. Let's just move this down here. Let's project a wave C up here. That'll give us our next. It's going to go up wave C. 1, 2, 3 clicks on the chart, and these are our next targets to the upside in gold, which will start around 104.25. So this holds as support. We should see this next resistance area. We can also take a decision point if we want additional resistance level there, right in that same area, starting around 104.50. So those are your next resistance levels in oil, with our support right in this area where we are. And again, we were expecting the pullback since we hit the target on the long trade there. We were expecting, the market to pull back there in oil. And then let's just take a look at the dollar. So you can see the dollar went, we had wave 3 here, wave 4 into wave 5, and our decision point resistance, and we're expecting a pullback there, which meant probably going to get a rally in the euro. We'll take a look at that in a second, and you'll see that in fact the euro's been rallying. The dollar has pulled back. Not sure that the dollar is done after a pullback, making another move to the upside into this decision point resistance area, right around this 82.50 area. Reason being, this was the last swing into the major low in the dollar. This B swing here, I took a decision point off of this B swing, and this gives us this resistance area. This is a significant area here that I think the dollar, after it pulls back, we'll see how it settles out, and then maybe the euro reverses and the dollar reverses back and attempts to make a run into this area. We'll see. It has gone 5 waves up off a major low here, so we could expect a pullback, and this pullback could actually be all the way back down to the 74.12, 74.10 area. It's possible, but I think there may be more strength to the upside. We'll see. And then just to look at the euro here, you can see we had a nice trade on the, actually a couple of nice trades in the daily euro. This is the euro US dollar with the FXCM data feed. So the TS3 here on the neutral trend, it was just an automatic trade set up. Anyone could take this one for 6.5 R to the first target there. STF was showing some strength there, so we could trail this one with a trailing stop, and you'd be stopped out at this point. Again, this is a trade that was already completed. Alright, so about 9.8, almost 10 R. So on this one trade alone, on the daily euro US dollar, I mean, you basically were able to finance 9 losing trades. Alright, and just after that trade, the TS1 here set up to the short side. Again, neutral to red STF, we can go take short trades. We just have to avoid long trades. Alright, and this one went for another 8.2 R. As we got to the target here, STF was weak, telling us it's okay to take this first target and be done with the trade. So almost 18 R between the two trades. So what has that accomplished? Well, exactly what we want to do in trading is we've just financed between these two trades in the euro at least 16 losing trades between the two. So it's very easy to take the next trade, even if you lose, the next 5 trades in a row. You've got to, you'd have to lose 16 times in a row just to give back your profit. All right, that's the key. And speaking of FXCM, we've talked about this, and that is the study that they did on their clients' trades over, I think, a 2-year period. They found that their clients' analysis was good, that they had more winning trades than losing trades, and some of the pairs they found they were higher than 70% winners to losers. The problem was that they found that most of their clients were losing money, and they said, well, how can they be losing money if they're winning most of their trades? And when they delved a little deeper, they found that their clients were having small wins and big losses. So basically, the few losses that they would have were wiping out all their gains and more. And so this is the crux. This is the whole key to trading. This is why you want to have big wins and small losses, because a big win like this, even just this one trade, you've just financed 8 losing trades. So you'd have to lose 8 times in a row just to get back to even. Okay, that's the key. That's how to get the math working in your favor. All right, enough said there. Hopefully we're looking for some great things here this year, and starting in February we'll send out some emails because we're going to have some special events. February 27th we'll be doing the Online Trading Expo, and on the February 14th and the 28th we're having a series of webinars with Adrienne Tograde, the trading coach. She's worked with multi-million-dollar traders, helping them with the kind of the psychology or psychological aspect of trading. So that's half the equation. You've got to have an adequate method, and the other part of the equation is you, the trader. You've got to be able to execute the trades, allow the trades to play out to their logical conclusion, whether it be a 8-hour win or a 1-hour loss. So some great things planned this coming week. Like I said, we got the Fed meeting out of the way. We've got a kind of a quiet Monday as far as news goes, and starting to pick up on Tuesday with consumer confidence and Chicago PMI, and then Wednesday you've got construction spending, the ISM manufacturing number, and jobless claims on Thursday is kind of the biggie, and then employment on Friday. Alright, so we'll wrap it up there. We'll come back next week again after we had the monthly close, and we'll see where we close things to end the month, and what we do for January. As they say, as January goes, so goes the year. We'll find out. All right, have a good trading week. We'll see you back next week.